Welcome back and Happy New Year. I'm sure many of us were hoping for a quiet start to 2026. Unfortunately, we got the news out of Venezuela yesterday. And so it appears that that holiday break is now over. We're back into it. Let's just take a look at how markets are responding today. We're recording this on a Monday morning. The markets broadly are positive. And I think that's really important. If you look at, we don't like to focus too much on the Dow. It's just 30 stocks. It's not indicative of the broad economy, but the Dow is up close to 800 points as we're recording this. The S&P 500 up close to 1%. So the markets aren't really paying much attention to what's going on in Venezuela right now for a couple of reasons. Number one, this is still a fluid situation. There is just so much that we don't know. But if we were to focus on the facts, there's a few things that I would highlight. Number one, Venezuela today is a much different country than it was decades ago. In the 1970s, this is a country that accounted for 1% of global GDP, and they produced about 3.5 billion barrels of oil per day. So they provided about 8% of the global oil supply. A lot has changed. So today, they account for about 1/10 of global GDP, so a very small part of the global economy. And when it comes to oil production, they only account for about 1%. Now, at the same time, they also have the world's largest oil reserves, but they just aren't producing it. That is not going to come online overnight. This will take time. And so we are currently waiting to see how this plays out, what happens with new leadership in Venezuela, what happens with respect to oil. And even beyond Venezuela and Latin America, there's a lot of talk right now about how the rules of engagement are changing. There's been talk about spheres of influence and the Monroe Doctrine. Is Greenland next? These are things that we ultimately do not know, but we'll be watching closely. Now, as we get back to our regular programming, there's one thing that I would highlight this week that we'll be keeping an eye on. That's the jobs report. So this comes out on Friday. It's the first Friday of every month. Over the last couple of months, this has been delayed. That was largely as a result of the government shutdown. Now that everything is back up and running, we are going to get this new release on time. So that's great. This is really important because we are still very focused on the health of the economy, on the health of the labor market. We're focused on it. We know the Fed is focused on it. We've seen some material softening here. In fact, on a 6-month rolling basis, we've seen that the average jobs that have been added to the economy are just under 20,000. That's per month. And this is well short of where it was before COVID. In the 5 years leading up to COVID, we were seeing about 200,000 jobs being added to the economy each month. So things are definitely slowing down. I think part of the debate is still, is this being driven by a lack of supply? And that is, are we seeing fewer workers because so many are currently retiring? There's currently 2.5 people exiting the workforce and retiring for every one that is entering the workforce. So that could be impacting the supply. And then there's also the fact that immigration is slowing down. We've actually seen the lowest immigration in about 100 years. And so is this providing less supply of workers? And then obviously on the demand side, there is that obvious fear that companies are focused more on AI, or they're waiting to see what happens with respect to tariffs and how things ultimately play out. So they're a little bit cautious about hiring in this environment. So I think that debate is going to continue, but for now, we're keeping a close eye on the health of the jobs market. I think Friday's report will be crucial and will help inform our view as well as the Fed's. So I'll leave it there for right now. I'll look forward to catching up next week. If you have any questions, as always, please don't hesitate to reach out to your financial advisor.